Hello and welcome to my channel Wonders of Price Action. This is the news for CPI on the Thursday for USD. Now CPI that was here we see core CPI month over month of the December was neutral and CPI month over month for the December it came positive means it was expected 0.2% but it came 0.3%. And CPI year over year for the December was expected to be 4 forecasted 3.2%, but it came 3.4%. So this CPI is positive. It means that it is high probability that they will not be decreasing the rates. Now we are going to watch the PPI that was the data today. Now this is where is CPI? It was on Thursday, and now we are going to move on the Friday on the 12th. On the Friday 12th, here we have the USD data of PPI, month of over month of the December. Here we see that it previously it was minus 0.1% and it was expected to be 0.1%, but it came negative minus 0.1%. Now, what is PPI and what are CPI? We are going to websites where we are going to see, watch in this in detail, then draw some conclusion what is expected. Because when PPI is increased, this shows that they could be decreasing the rates. There is a conflict in the data of the CPI and PPI. So now let us move to the first of all to the CPI, then we will come to the PPI. So we have here the CPI data and where we have this is on the US Bureau of Labor Statistics. Here we see for the CPI for all items rose 0.3% in December, and this was issued on the 11th January. In December, the consumer price index for all urban consumer increased 0.3%, seasonally adjusted, and rose 3.4% over the last 12 months, not seasonally adjusted. The index for all items, less food and energy, increased 0.3% in December, up 3.9% over the year. So this shows the increase in the. Now here is the chart. This is for all items, 3.4% increase. This is for food. This is the increase of 2.7%. This is minus 2%. This is energy decreased. And here we have all items, less food and energy, 3.9%. And the next data will be coming in the February 13th. That will be of the January 2024. Now, CPI shows that they are not going to cut the rates. This data shows all this. But we have to watch also the PPI that was issued on the Friday, on the 12th of January. Now we are moving to the PPI, then we will conclude out of this. Now here we see PPI. PPI for final demand falls 0.1% in December. Goods decrease 0.4%. Services unchanged. The producer price index for final demand fell 0.1% in December. This is what is PPI? The price that producer they receive, and the CPI what the consumer pay, and the PPI what the producer receive. So if the consumers were paying much, but the producers were getting less, what is this contradiction? Now we have to understand this. The producer price index for final demand fell 0.1% in December. Prices for final demand goods decreased 0.4%, while the index for final demand services remain unchanged. Prices for final demand rose 1% in 2023. Now, what has happened? Goods decreased 0.4%, means the price that rose, that increased the CPI was because of the decreased production of the goods. So the CPI is not that reliable, because when the things goods were produced low, this is the reason that the producers got less. So this cancels the CPI, I think, and this shows that the in the next meeting of our interest rates, it is high probability that Fed is going to decrease the rates. So this is overall, when we combine both of the data of CPI and PPI, this is negative for USD. So let us see what happens. This is my analysis of the two datas. Now I will be analyzing the datas on the monetary policies, GDPs, CPIs, PPIs on this channel. And in this context, then we will be analyzing the pairs technically. Like my this video, subscribe my channel. Thanks for watching. Fine. Bye for now. I'll be coming the next video with another analysis. Bye.